There's a lot of wild stuff going on right now. We saw silver and gold have epic bull market, and now they're consolidating, and everybody's wondering what happens from here. But there are a lot of big things probably happening in precious metals going forward, and that's I think going to be a major story. Oops, one sec, I just dropped my earbud.
No worry.
Okay, that's going to be a major story for a lot of people going forward, because a big part of my audience, and probably a fair part of your audience, are gold bug-ish people. In other words, people who have chosen to move their finances out of fiat currency-centric instruments and into real things like gold and silver. And so it's been a great year with the very real possibility of a couple of great years. I think that in precious metals right now, that there's a decent chance that we see some turmoil in the paper where people trade futures contracts, because a growing number of contracts are standing for delivery on the COMEX. In other words, people who have long futures contracts that they didn't used to actually want to use to take physical metal out of the equation. They used to just gamble and they'd get paid off in cash. Now they're starting to ask for physical silver, and it's not clear there's enough physical silver in the inventories of the paper exchanges to make good on all those demands. And then what happens? Do you have some kind of a default, and what does that do to the silver price? That's there's no guarantee that is something that blows up in the short run, but it's something that some people are predicting that it'll blow up in the short run, and that with silver being in deficit, in other words, we don't produce enough silver to satisfy the demand for it, that we could see something like that happen, and that sets off a chain reaction in the commodities markets where people say, wow, if that can happen with silver, what about copper? What about zinc? Yada, yada. And so if you're a commodities investor, which you should be, this is the kind of thing to pay attention to, because it changes the dynamic in that market in a way that makes your holdings a lot more valuable. So don't jump in with both feet. Don't do anything extreme, but continue to add to your position in commodities, because we're looking at not just extremely long-term positive fundamentals, but maybe some short-term disruptions that send the prices higher. And I think silver is obviously one of the big beneficiaries of it. And you've got analysts out there talking about triple-digit silver and $200 silver and $500 silver, and that's the kind of thing that can have psychological consequences in the market. If it gets enough people excited enough, it can become a self-fulfilling prophecy. So let's pay attention to that. See how it goes. One of the things that has been interesting lately is I've had a lot of friends who weren't really precious metals investors, but who picked up on the silver bull market. Silver just rocked. I think it tripled in a year. And so a lot of people started treating that like a bull market that was going to go on forever. And so the question became, how do you get in as fast as possible? And so I got a lot of questions about, how do I use call options to play this silver thing? And I of course said, don't use call options to play anything, you use them maybe to limit your risk, but not to just take naked long position. And so we saw a lot of that where silver caught the imagination of people. And so if the whole silver $200 an ounce thing starts to happen in the year ahead, I think we could see an awful lot of people out there who are already primed for it, jump into this thing, and silver become an extremely hot story. And wouldn't take much from here for that to happen. Just have it go up above 100, and all of a sudden that big round number catches people's attention again. So I think silver could be a .com-ish kind of story where a lot of people get very excited by it and start doing things that, in normal times wouldn't be wise, but this bull market is just rocking in a way that leads a lot of people to take a lot of big positions. So, that's another thing to pay attention to, and another thing that you don't want to get swept up in. Just watch it, enjoy it, and gradually build positions in the stuff that has the best fundamentals. But, I think the next few years, we're going to see extreme volatility in a lot of different places. And we have to hope it's not caused by World War III, but I think there's a really good chance that it's caused by shortages of things like silver and copper, and that that leads to some extreme market move and makes a lot of money for people who are well positioned. But we'll have to see. Anyhow, that's the commodity story looks great from any angle, and I think it becomes just an exercise in self-control. You know, it looks so great, but there are all kinds of things that could happen that derail it in the short run. So you want to add to positions gradually and not bet the farm on any of this stuff just because some talking heads online talked about great fundamentals.
The precious metal space, and this is same with the equities market, is they do have short-term mixed signals. So when we look at this 150-day moving averages, thick moving average, and along with these other moving averages, they're sloping upwards. They're trending up. So the long-term trend remains up. That's a great way to get a gauge. Is price, long-term, is it still in an uptrend and rising, or is it in a downtrend? So the precious metals is the same with gold and silver and platinum and palladium. They are in a long-term uptrend. The wild card here is the extreme volatility that we had. It did quite a bit of damage to the chart, and now the charts are trying to figure out what they're going to do. We are seeing gold continue to move higher, and it's back up to around 5,200, which was kind of a Fibonacci measured move, a target that we had a long time ago. And so now we're back up into this key resistance area, and we need to see how the market is going to react. So long-term trend, it's up. Short-term trend, it is, when we look at it from a candlestick pattern or a chart pattern, this big red bar coming down, price action is working its way up. These are called inside bars, and it can actually be seen as a bearish sign. So price will work its way up, and it can get right up to the upper end, and then boom, you can have another big bout of selling, and it can bring it right down, and then it can start to go lower. And so that's the big question. We saw huge volatility, massive volume surge, and of course it was also, I think one of the key things here is it was a lot of sentiment. The air was so thick you could cut it with a knife with people wanting to get into precious metals. And when the sentiment is that thick, you also have very big price reaction, which is what we saw. And so that's the big wild card. Not only is this candlestick chart pattern a little bearish, meaning, gold's got to prove itself here. Same with silver. Before I get wanting to get long and get bullish, but the sentiment is a warning sign that it could potentially be a significant standout high. Let's just take a look at the long-term chart here. If we zoom out a bit, you'll see how gold has a series of rallies, and then it pauses for several months, has a big rally, pauses for several months, has a big rally, and so now I think we need to see the precious metal space work itself out. It can come up, it can trade sideways, it could go sideways for a few months here, and it can still keep moving higher. And if it builds a strong chart pattern and the volume and everything is in line, then we could have another big move, and it could easily run. The next target after this is about $6,100 for gold. So gold and silver have these chart patterns that they need to just kind of build a new launch pad and build some confidence that this isn't just going to get stepped on with another big bout of selling any day. The price of gold and silver are what they're at right now. The mining stocks, seem to be undervalued. They've had some pretty big moves, and they are performing fairly well at the moment. I mean, they obviously had a big sharp pullback. Right now, I mean, they're still in a long-term uptrend, and they're just like gold. They're pushing up into resist where they got sold off into last time. So we just need to see how they go. I think, the precious metal space is all the same trade. It really is. You either trade gold, silver, or miners, or you have a combination of them all. They almost all go up and down together. So they're all the same trade. It's just some of them might outperform more than the others. And so that's why I think a lot of people diversify, right? They'll have silver, they'll have gold and miners, but the miners are performing well. I mean, obviously, silver is, we'll look at the chart of silver in a minute, but silver is way down here, floundering and really struggling to catch a bid, whereas gold and miners are already up near previous highs, showing they're more resilient. And that's the way I think gold is kind of always like that. People are nervous. They naturally flock to gold, and because it's more stable, and it's a bit more of a defensive play than silver. Silver definitely has a more speculative angle to it. And so gold miners are also benefiting from that. People are getting into the large cap gold miners. They're really liking I think the valuation standpoint, as you just mentioned. Fundamentally, at these high pricing for metals, the miners are undervalued still. I think there's a good possibility that, because what we saw here, if I zoom in on this, 2008, we saw precious metals explode higher. So if the stock market, for example, starts to sell off right here, we could see gold and silver have a very strong push up, and the stock market starts to break down. As you and I talked about, the NASDAQ was on the verge. is on the verge of breaking down. So we could see the NASDAQ actually start to break down, and we see oil, gold and silver rally temporarily. Eventually, as the stock market keeps selling off, I think it'll pull metals down with it. So I think we just need to give it some time to see if the stock market breaks down and if the money from stocks flows into precious metals or not. I do have an interesting chart here of silver comparing the 2011 type of scenario. If we look at this is silver right here. There's another bar, so since I've pasted this, but we had this big run up and these pauses and rallies and pauses and this huge